screen, it says Q&A with a couple two little speech bubbles. If you're just commenting and you're just telling me that, Lisa, your nose is running and you sound terrible, by all means, go ahead and put that in the chat box, which is what everybody else has been doing so far. Or if you want to, say hi to a participant or anything like that, or just comment on something. But we're trying to keep questions in the Q&A because it gets a little hard with 150 people to look through the chat box sometimes. So when you see, before you ask a question in the Q&A, if you would please look and see if somebody else has already asked that question, and you can just upvote it, that's a question you share, that would be great. Or if you just see somebody's question in the Q&A that you always wanted to know, please upvote it so that we make sure we answer those. We will be putting the PowerPoint out later. It'll be available on the Employment First website, as well as we might put it in I don't know if we're going to put it in the chat box today, Keith. Sometimes we put it in the chat box too.
You know what? I'll try to, but if not, like you said, you can hook it up we'll get it up on the Employment First website probably in a week.
And I put it on Member Connect also usually, so
okay.
We can definitely get those to you. All right. Leah, I have no idea what to do with a raised hand, and I don't know if that was an accident, but if you can put your question in the chat box, that would be super helpful. And I will, lots of people are raising their hand, by man. That's okay, Leah. I don't know what I'm supposed to do with a raised hand. I think there's a way to do something fancy, but
you unmute. Do they unmute and ask a question? Go ahead. Sorry.
Yeah, maybe there's a way I can unmute you, but I'm just going to not do that. Now Dorenda's raising her hand. Dorenda, seriously. I just said I don't know how to unraise hands. So I just unraise them and put them in the chat box. Okay, Keith.
You ready?
Take it over. I'm going to record. Hold on. Don't let me who can see this? Recording is on. It's automatic. Okay, we're good.
Dorinda was just trying to figure it out on the hand raising
okay.
thing. So we're all good. So this is episode 6 of Fear Factor, and today is December the 12th. We're going to be here for an hour and a half, and we're doing a refresher because we figured SSI and Medicaid, we can always kind of go back to it and learn about it over and over again, because it still, at least in my thick skull, doesn't get in the way it should. So I'm glad that you guys are on board with us today, and I'm going to move the slide forward. So here's the layout. We're going to do some introductions, then get right into the meat of it with the SSI and Medicaid refresher, and then we'll have next steps, Q&A, and take a poll on what we want to do when we come back together in 2023. Here's the first poll. You ready, Lisa?
I sure am. Let me go ahead and share that first poll. Let's see. Hold on. I want to share the poll, but I have to find it. Okay, polls. All right, I'm going to launch them. I got 3 questions here, and we have it on the poll, and we also have it on the PowerPoint. So, well, you can see there's typos. What's your role here today is the first one. Who's here? So we've got SSA, other county board staff as an option, family member, self-advocate, person served, person receiving any of these things we're talking about, OOD, provider, DODD staff, or other, if you're an other. So if you guys can all answer those for us, that would be amazing. All right. And then on the second question, we've got, have you attended these Fear Factor sessions before? We're just trying to find out how many new people we're getting on this one, especially because we knew it was a review. So we're just looking at that. So yes and no. Yes, I am a big fan, and no, this is the first time. Okay, that's pretty self-explanatory. And then the third question is, how much have you heard about SSI and Medicaid prior to today's session? If you have heard nothing and you've been living under a rock, then you would answer the first one. I have heard some, but I know very little is your next option. I consider myself fairly knowledgeable, which is where I should be, but again, I'm not, because I have to hear it so many times. And lastly, I believe I know as much as the presenters and could be presenting today. And you know what? Somebody answered that yes already. What are we going to do with that, panelists? Somebody, I see one already has answered that. I'm going to go ahead and share. I'm going to end the poll now and share the results so you all know who's in the room with us. So we have 70% of people are SSAs that are on this call today. Another 17% still work for county boards, but have a different position. We have 5% or 7 people that are family members. We have no self-advocates, although I know we actually do. We have a couple on our panel that aren't able to do the poll. And we have a few providers. Thanks for coming, providers. We're so glad that you're here. We have a couple people from OOD and somebody from the department on, besides Keith, who's also here. And then it says other is 2 people. We have 60% of the people have been on a Fear Factor session before, and 40%, this is the first time. Welcome to all the new people. Thank you for coming on. We're excited and we're glad that you'll be hearing some of this for the first time, and about 60% might be hearing it for a second time. And lastly, like I said, we have about 40% of the people on the call have heard some, but know very little. About 57% consider themselves knowledgeable about this. And there's one person here, if I could figure out how to figure out who that is, that thinks that they know as much as they could be presenting today. So I hope that person is going to jump in with some comments.
Maybe they should raise their hand.
Yeah, raise your hand and let
Raise your
yourself
hand if
be
you're the one
known.
person.
In case our presenters fall ill, we've got a backup now. Thank you. All right, I'm going to stop sharing and we're going to go ahead.
You got this slide? You see it?
Sure. So yeah, so just a little background. The reason why we call this the Fear Factor, other than the fact that Keith and I really love the show, I guess, and the idea of the catchy name Fear Factor, it was really because we came up with this acronym that you know, it's scary. This is a scary topic about working and losing benefits. And maybe the way to deal with that is to have more facts. And the more facts we have, we can evaluate what's appropriate on each case by case situation. And then we can take the action that's needed based on the specific situation that we're talking about. And that will get us results. And the results that we're really looking at are more people working and understanding how that affects their benefits and making informed choices about work and good and not being so afraid. So if that is where the FEAR acronym comes from.
And basically what Lisa just said, the purpose behind all these episodes, all these sessions is just to bring the people together so we can all face the fears around benefits and working and just move forward. So thanks. We have a pretty good, I think 175 folks on. So it's great that you're all here kind of just to hear about SSI and Medicaid, but also if you have questions, put them in the questions box and we'll try to answer them. We've been around for about 1.5 years, maybe. We've done 5 episodes and they're all stacked up on the Employment First website, which is a link I'm going to show you here in a second. And we've published a Fear Factor working document, which you can get to on the Ohio Employment First website as well. That's there with all the other information around Fear Factor. We're going to poll you at the end of this one to figure out what we want to do next. So, and here's all the list of all the episodes we've done. We've done everything from SSDI, maintaining critical services and support, benefits, stable accounts, Medicaid buy-in. We've done a lot of different kind of subject matter around fear of working and benefits. And we'll add this one to the stash, number 6. You'll be able to see it here in a week or 2 on the Employment First website. You already did poll 3, didn't you? So we're good. So we can just skip that slide. So I'm going to now just tell you about our roster of great presenters who are going to be on walking us through this refresher course on SSI and Medicaid. We have Beth Risner from Butler County Board of DD, Tanya Chiles from Chiles Creations, Dorinda Gear, who's a certified work incentives and transitioning youth practitioner from Fairfield County DD, Jeanne Hall from OOD, Latosha Ollinger from Warren County, and we have Christine Brown as always with us to kind of hang out and be a part of things. So I think now I'm going to stop sharing and start sharing the other PowerPoint, and we'll get going on the SSI and Medicaid refresher. I'm not sure who's going to start, but I'm going to go ahead and get it up here for you. Who's going first?
That would be Tanya and Keith. I think your slides are not at the beginning.
Yeah, they're not where they're supposed to be.
Sorry, I'm trying to get to the, I can't get to the, there it is, to the slideshow button because of the tool thing was in the way. Now I can do it. Sorry. Are you good?
I'm good. You can go to the next slide.
Perfect. Just tell me what to do.
Good morning. My name is Tanya Chiles, and I'm the owner of Chiles Creations, which is a benefits consulting company. And we're here to talk about the big picture of SSI. When you're a recipient of SSI payments, when you work, your wages go down gradually. They don't actually disappear all at once. SSI does not, Social Security does not count all of your income when it goes to your earnings. What happens first is a calculation. First, they take $20, and this is a calculation, not actually, because I've had clients to say, do they take that out of my paycheck? And no, this is actually a calculation that Social Security uses to determine what your SSI benefit would be. First of all, they subtract $20, which does not count as a resource. It's called the general income exclusion. Second of all, they do $65 deduction, and then they divide that in half. Next slide. Here's an example. Let's meet David. David accepted a part-time job. He will earn $1,225 per month. David is concerned about his SSI payment and will look to know if he will still be eligible for SSI if he is working. Next slide. This is actually how the calculation sheet looks if you were determining what his benefits would turn out to be. First, we would take his gross earned wages. That means before any taxes have come out, that's the number that we use. If he would have a student, he might have a student exclusion, which we talked about later on. You would go down since he does not have that. So it's $1,225. Subtract the general exclusion, which is $20, takes it down to $1,205. Subtract the earned income exclusion, which is $65, takes it down to $1,140. He does not have any impaired related work expenses, which are called IRWs, and we will talk about that later. So the remaining balance is $1,140. That is divided by 2. Which means that it goes down to $570. He does not have any blind work incentives, and also we'll talk about that later, so that his total countable earned income is only $570. That would be what would be subtracted from his benefit that he receives now. There are some other things in between there that really is not anything that he has at this point. He does not have a pass. He does not have any other countable unearned income. So you would take the federal benefit rate, which is $914. You would subtract the $570. So his adjusted SSI payment would be $344. Then we go on to see how much he actually would have as a total financial outcome. You would take the $344 and his gross wages, which was $1,225, add that together, and his financial income for the month would be $1,569. Next slide.
All right, I'm going to take it over from here. We're going to talk about the Student Earned Income Exclusion, better known as SEIE. What is SEIE? SEIE stands for Student Earned Income Exclusion. It allows SSI beneficiaries under the age of 22, remember that number, 22, regularly attend school to exclude, and this is effective January 1, $2,220 per month, or up to $8,950 per year. This amount changes every year due to the cost of living. The exclusion is applied before any other and is one of the most generous SSI benefits offered. That's why I picked it. What is Social Security's definition of regularly attending school? The student must take one or more courses of study. At least one of the following must be true. In grades 7 through 12, at least 12 hours a week. In college, at least 8 hours a week. In a training course to prepare for an employment, at least 12 hours a week. 15 hours a week if shop practice is involved. If a student attends less time for reasons beyond the student's control, for example, due to their disability, they still must both study the same amount of time and have a home visitor who directs the study. And we get this question a lot. Does homeschooling count? It counts as long as the program meets state of Ohio regulations. So how do we use SEIE? So if you receive SSI and you start working, the first thing you're going to do is contact your local Social Security office. You're going to report the earnings and you're going to ask the representative if you qualify for SEIE. And again, to reiterate the rates, $2,220 per month, and that will lead to no reduction, and $8,950 per year. So we're going to show a scenario, and the scenario that I'm going to show you, as long as she's enrolled in college at least 8 hours a week, or in a employment training program at least 12 hours a week, none of her income would count as long as it did not exceed the $8,950 for 2023. So now let's go over our example. Meet Stacy. Stacy is a 19-year-old student. She has been offered a short-term job. She would work 20 hours per week and earn $1,085 each month, October through April. Her family is worried, and we hear this a lot too, about her SSI causing an overpayment. They are worried about her Medicaid coverage as well. So let's take a look at this example. So focus down on step 2. We're counting her $1,085. When we minus out the amount for SEIE credit, that takes care of her whole $1,085. So that allows us to step down to step 4. The full benefit rate of $914 a month is the max that she can get. In step 5, we see that we take that $914 a month plus $1,085, and that gives her a total financial outcome of $1,999. Not too bad for a working student. So now let's talk about the SEIE running tally. A student earning less than $2,220 per month will need to keep a running tally after deducting earnings each month, so that they are sure that they're under the $8,950 per calendar year. It is important to keep this running tally and keep the student informed on how much SEIE remains. Section 432 of the Social Security Protection Act extended the SEIE to individuals on a record who are working under the age of 22, not just the SSI recipients. This means that SEIE applies to earnings deemed from ineligible spouse or parent, and to the joint earned income of eligible couples when both members are under the age of 22. The SEIE applies only once. So in other words, if you have a working couple, even if they're both students, you can only count one of the couple. The SEIE does not apply when one member of a couple is non-working student and the other member works but is not a student.
Good cold Ohio Monday. Can everyone hear me?
You're doing great.
Okay, sorry, I couldn't even see where I was. That's why I was hesitant for a minute. So what you're hearing about right now are what's called work incentives. And basically what work incentives do is they reduce, if eligible, countable income so that an individual can keep more of their SSI when they are working. Sometimes it's not that easy to just go back to work, working full-time or even part-time. And there's a hesitation or a fright, if you will, about losing the benefit. The work incentives are not often told to individuals and families by Social Security, and even support people are unaware of them. So that's what we're doing here, is to give you a basic introduction into what they are. So you heard about student earned income exclusion. I'm going to talk about impairment related work expenses and blind work expenses. Next slide, please. An impairment an impairment related work expense. What that means is the expense has to be out of pocket, related to your disability or impairment, and enable you to work. It has to be paid by the beneficiary, not reimbursed by a waiver service or any other type of source. And it has to be paid within the month for which you're reporting earnings. So for example, individuals have to report earnings by the 10th of the month. So by the 10th of December, earnings for November had to be reported. If there were any impairment related work expenses in November, those two must be reported by the 10th of December. And then of course the expense has to be reasonable. So basically what happens is what I said earlier. Social Security, if eligible, will deduct that expense from the gross income, and we're always talking gross income. It's always pre-tax. It lowers the countable income, increases the SSI benefit, and I'll show you that in some charts here in a minute. And expenses can be receipts, but they can also be written down. And I have a lot of questions about this when I'm talking with clients. Sometimes people are transported or drive themselves to work because local transportation is not available. There is a mileage deduction that may be eligible. Well, you don't get a receipt for that. So the best way to track it is to write it down every day, the miles to and from work. And then Social Security will use that as documentation. Next slide. Okay, here's our example. We're going to meet Maria. Maria earns $875 per month. I got that from taking the 2023 minimum wage for the state of Ohio, which is $10.10, times 20 hours per week. She's working part-time, and then times 4.333, which is the average weeks in a month. Maria pays $100 per month for medication that she needs to work because of her disability. She pays that out of her pocket. Next slide. Okay, the SSI calculation worksheet. And again, remember all these numbers are for 2023. So she doesn't have any earned income to count. Her gross income is $875, as we discussed. Everyone gets the general income exclusion of $20. Because she works, she gets the earned income exclusion of $65 with a remainder of $790. Then we subtract, or we should say Social Security subtracts, the $100 she spends out of her pocket for her medication, giving her a remainder of $690. Divide that by 2, $345 of the $875 gross that Maria makes is going to be used to determine her new adjusted SSI payment, and that's the next set of blocks. Using the 2023 federal benefit rate of $914 for an individual receiving SSI, her adjusted SSI payment should be approximately $569. And to show the total financial outcome, and this is pertinent to individuals as well. You can talk it, but if you see it on paper or see it in a chart, as you'll see next, it shows them visually, even though you're working and your SSI is reducing, you have more accountable income. So her total financial gross outcome is $1,344, which is a whole lot more than 914. Next slide, please. And this is the same way, I should say, this is a way of showing that without using the first block, without using impairment-related work expenses, you will see in number 5 that Maria's adjusted SSI is $519. In block 2, if she uses at least $100 in impairment-related work expenses, her adjusted SSI is $569. That gives her $50 more of SSI that she gets to keep by using the work incentive impairment-related work expense. Next slide. And this is a chart that actually I believe Jeannie developed and I stole from her. It's really a very good visual when working with individuals. You can show them the difference in the SSI reduction using IRWI or not, and then the total financial outcome. On the right, using $100 of impairment-related work expenses gives Maria $50 more of gross pay. Next chart. Now we're going to talk about blind work expense. Blind work expense is crazy. And if you have an individual who does have a visual impairment, you'll want to make sure they use BWE instead of impairment-related work expenses because they get much more in deductions. The work-related expenses do not have to be related to the disability. That's a big difference. Must be reasonable. And then they again are excluded from countable income. You must have, the individual must have a primary diagnosis of blindness, meaning Social Security's definition of visually impaired. And then it must be tracked and reported each month. When you submit your pay stubs, what's not on the pay stub also has to be submitted to Social Security to get the deduction or credit, if you will, for that expense. Some examples, and this is huge. Federal, state, local, and Social Security income taxes are deducted from the gross income. And this is on paper, or figuratively, I should say. Transportation to and from work, not unlike IRWI. There's vehicle modifications, meals. If an individual is working and buying lunch during work hours, the amount of money they're paying for lunch can be deducted, or dinner if they're working a different shift. Guide dog expenses, work-related training, visual and sensory aids, translation of materials to Braille, attendant care services, medical equipment or supplies that help you work, and therapy. So you can see there are a plethora of work incentives, or I should say examples of blind work expense that can be deducted from an individual's gross income to keep them, to allow them to keep more of their SSI. Next, please, Keith. Okay, this is Andrew. We're going to stick with the 20 hours a week at 8:10, or excuse me, 10:10. Got to get used to all the new numbers for 2023. So Andrew makes $875 per month, is blind, and he pays $100 per month for a bus pass to and from work. Next slide. Okay, so for example, and really this is wrong, he's going to get a whole lot more than this. His blind work expense he pays out of his pocket is $100, but on his paycheck, Social Security is going to deduct for all the taxes that have been taken out, and if he paid for any lunches. So we needed to add into that. And maybe he didn't, maybe he only works 4 hours a day and he doesn't have lunch or dinner. But there really is going to be a higher expense here because they're definitely going to deduct the taxes, federal, state, local, and Social Security. But for this case, we'll just use the 100. You see that his total countable income, when you get down below the yellow highlighted BWE, is $295. Again, it's the same principle as the other two. You subtract the expense, the countable income, from the federal, base rate of $914 and his adjusted SSI payment is $619. So that's keeping it simple. And the total financial outcome is then $1494. And the next chart, Keith, will show you the difference between the two. You have to look at the top on this one. The total gross income at the top is $1226. On the left chart, on the right chart, it's $1526. And that is not the right chart. I apologize. I will get that corrected as well as the spreadsheet before and make sure that those are the right charts before Keith or Lisa send them out to you. Next chart.
Plan for achievement of self-support, PASS plan. PASS plan is a work incentive that hasn't been used as much as it could be for beneficiaries. Next slide. What is a PASS and who qualifies? A PASS is a work incentive that allows individuals with disabilities to set aside income or resources to pay for an item or service needed to achieve a specific work goal. The purpose is to increase or maintain income producing capabilities, thus reducing reliance on government benefits. Must meet the following criteria. Under 65 or previously entitled to an SSI benefit based on blindness or disability the month prior to reaching the age of 65. Meet Social Security's definition of disability or blindness. Meet all SSI eligibility criteria with the exception of the income and resource test. And finally, have earned income, unearned income, deemed income, in-kind support, or accountable resources that can be set aside for a PASS plan. How is this useful? Income and resources, which could normally prevent SSI eligibility or reduce the SSI check, can be disregarded if they are placed in a PASS and are used towards a vocational objective. The individual can use extra SSI to pay for living expenses such as housing and food. The income or resources set aside in a PASS is used for items or services needed to achieve a designated occupational goal, education or training, attendant care, supported employment, transportation, job-related items, or equipment to start a business. Next slide. PASS example. Let's meet Charlie. Charlie is 30 years old and receives an SSDI check of $920 per month. He wants to go to college to obtain a degree in nursing. His goal is to then become employed as an RN. He applies for SSI, and once this is approved, he applies for a PASS, which also was approved. He will put aside his current countable unearned income of $900, which is his SSI payment minus $20 exclusion, towards his PASS income, PASS expenses. He's saving for a laptop, books, a car to get to work once he's employed. This means that $900 will not count towards his eligibility for SSI. Since he is not working and the SSDI is not counted, he will receive a full federal rate in SSI each month, $940, which will be the federal benefit rate for SSI in 2023, to use to pay his usual living expenses. When his PASS is complete, Charlie will have a degree and he can obtain a full-time job that will decrease his dependence on his Social Security benefits. Next slide.
So now let's talk about SSI wage reporting. Wage reporting is very important Individuals should make sure they report their wages every month. Next slide, please. Wages should be reported by the 6th of every month. There are several different ways that you can report wages. You can call it into your local office, visit your local office. You can also use your My Social Security account. We have provided the link here for individuals that do not have an account and they need to create one. You can also use the mobile wage app. A lot of our individuals use the mobile wage app to report their wages, and it's been pretty successful. Sometimes there is some glitch in the system, so they might have to use alternative means to report their wages for that particular month if the mobile wage app is not working correctly. One of the alternative ways that I mentioned earlier, and then there's also the phone system to record the wages as well. To find information regarding your local Social Security office, here's a link where you can visit. You can put in the zip code of your home address, and it'll populate which local Social Security office serves your area. There's also reminders that can be set up. You can sign up for email and text reminders to report wages for SSI, and we provided that link there for to set those reminders up if anyone's interested. Next slide, please. Excuse me. Income earned this month must be used to calculate SSI payments in 2 months. So for example, a recipient working in December of this year should report their wages by January 6th of next year. Those wages will be calculated for February 2023 SSI payment. So the adjustment will occur in February 2023 for wages that were earned in December 2022. Next slide, please. So we wanted to include information regarding SSI resources and also stable accounts to show some benefits of utilizing a stable account to save and maintain eligibility for SSI, because there are certain resource limits for SSI, and a way to save above the resource limit for SSI. Stable account is one option. Next slide, please. SSI resource limits. Resources are defined as cash or any other personal property, including any real property that an individual or a spouse owns and has the authority to convert to cash and is not legally restricted for support and maintenance. To be eligible for SSI, an individual's countable resources must not exceed $2,000. If an eligible couple receives SSI, the combined countable resources must not exceed $3,000. The following are some items excluded from the resource limit: the home someone lives in and the land, one vehicle, regardless of value, if a member of the household uses it for transportation. If there's a second vehicle that an individual owns, then the value of that vehicle, the second vehicle, will be counted against the resource limit. Household goods and personal effects are not counted. Life insurance policies with a combined face value of $1,500 or less. Burial spaces for an individual or their immediate family. Burial funds for an individual and their spouse, each valued at $1,500 or less. Up to $100,000 of funds in a stable account. For additional information regarding SSI resources, please visit this link. Just remember, if you're not certain if something is countable, contact the Social Security office for clarification. Next slide, please. So here's some information regarding stable account, excuse me. A stable account is an investment account that allows qualified individuals with disabilities to save and invest money without losing eligibility for certain public benefits like Medicaid and SSI. Social Security disregards the first $100,000 in a stable account when counting resources. There's no fee to open up an account. A minimum deposit of $25 is required. What are the benefits of opening a stable account? In 2023, stable accounts allow individuals with disabilities to invest up to $17,000 from any source and an additional $13,590 from wages annually. Account funds can be used on the following expenses: education, housing, transportation, healthcare, assistive technology, employment needs, and basic living expenses. To be eligible for a stable account, an individual must be blind or have a medical, determinable physical or mental impairment that results in marked and severe function limitations. And it has to occur before the age of 26 and would last or expected to last for at least a year. Be a US citizen, and one of the following has to be confirmed: are eligible for supplemental security income, Social Security disability insurance based because of a disability, have a condition listed on the Social Security Administration compassionate allowance condition list, experience blindness as determined by the Social Security Act, or has received and can provide, if requested, a signed diagnosis of the qualified disability from a licensed physician. To learn more about the Stable account, here's a link here for you to visit, and you can also contact their Stable team for information by phone or email. They're really good about getting back to you. If you have any questions, they're really good. Next slide, please. Now I'm gonna leave it over to Ms. Jeanne to get going.
Hi. All right. So we're going to switch gears a little bit and start talking about some common Medicaid types that individuals may have. So I was going to go through, this is not all the Medicaid categories, as you probably know, but I just wanted to cover the ones that probably see most often and give you a basic, some basic information about each of these. So we're going to talk about SSI related Medicaid, 1619B Medicaid, the categorically needy Medicaid, home and community-based service waivers, and the Medicaid buy-in for workers with disabilities. Go to the next slide. Thanks. Okay, so SSI recipient Medicaid. This is definitely the easiest to understand, very straightforward. In Ohio, this isn't true for every state, but a lot of states are like Ohio is now. And if you receive SSI, if you're approved for SSI, you are automatically also eligible for Medicaid. So you're automatically enrolled. You don't necessarily have to do anything extra. Once you get SSI, you're also going to have SSI related Medicaid. So go to the next one. Okay, so also related to SSI, but different, happens at a different time, 1619B Medicaid. So 1619B is going to allow someone who is eligible for SSI to keep their Medicaid at no cost once their earnings get too high to be eligible to get an actual SSI payment. So like we looked at the examples previously of how to calculate the SSI payment. When you have someone that's making enough money that we go through that calculation and it ends up that their countable income is actually higher than the federal benefit rate and results in no SSI payment for that particular month. That person could go into 1619B Medicaid category. You can stay in that category and receive that type of Medicaid, be eligible, as long as your earnings are less than $40,078 per year. That is the 2022, they call the threshold amount for that 1619B Medicaid. As you can see, very generous. A lot of people, especially if they're working part-time, but also even full-time, could easily stay in that Medicaid eligibility category, which is really nice. We do not have the numbers yet for that threshold for 2023. Sometimes they don't come out till a little later in the year of 2023. So generally it's higher. Occasionally it could be a little lower, but I wouldn't expect it to be hopefully too much different than this year's for next year. So again, who qualifies? We kind of talked about that. Anyone who's earned income, as long as it's under that 40,000 threshold amount and is getting zero in SSI, goes into that 1619B Medicaid category. You still have to have the disability and continue to meet the definition of Social Security's definition of disability, which just means that you can't, someone can't stay qualified under this category if, say, they have a medical review done by Social Security, so unrelated to their work. If they just go through a medical review and if for some reason they find that they don't meet the definition of disability anymore, someone in that situation couldn't meet the 1619B criteria. And they also would still have to keep their resources within the SSI limit of the $2,000 or less. All right, go to the next slide. Okay, so this one I see sometimes it's called the categorically needy category of Medicaid. It is Medicaid for individuals who are aged, blind, or disabled, but do not receive SSI. So similar to, you know, someone with the SSI Medicaid, but without actually receiving SSI. So maybe they are receiving SSDI instead. That's a possibility. To qualify, again, age, blind, disabled individual, your countable income has to be at or below that SSI payment level for the year. So we've been talking about 2023 since we're almost there. That would be $914 a month for an individual, or for an SSI couple, $1,371 income of countable income. So you have to be below that. Resources also still have to be the same as what we've talked about, $2,000 for an individual, $3,000 for the SSI couple. And just to note, when when we talk about that standard for the income, JFS is using the SSI income exclusions when they're doing that countable income. So like we talked about how they have those disregards, and they're really counting less than half of that actual earned income if the money's coming from earnings to qualify. Okay, you can get on to the next slide. Okay, so based on our poll, a lot of you are probably very familiar with this category. So the Home and Community-Based Services waiver Medicaid category. This is where Medicaid's paying for extra help for individuals to be cared for in a home setting rather than in a nursing facility or an institution. Different types of waivers, the ones through DODD, you have the individual options IO, the level 1, and the self waiver. There are also non-DD waivers, Ohio Home Care, Passport, Assisted Living, and MyCare Ohio would be examples. And then who qualifies for the Medicaid waiver category? You have to meet the level of care, so the intermediate or skilled nursing level of care. Your income, higher income limit than definitely like that last category we talked about. You have to be under what they call the SIL, the special income limit, which is each year that's going to be 300% of the SSI federal benefit rate. So you know what that is once you know the federal benefit rate for the next year. So it's just 300%. And then, so countable income for 2023 is going to be, it's going to be the $2,742 a month. There are some exceptions for if you're over that, you can use a trust, the QIT type of trust, to set aside any income that's above that level to be eligible under the waiver. And then the resource level, similar to what we've seen before, is the $2,000. Okay, next slide. Okay, and then one of my favorites, Medicaid buy-in for workers with disabilities, the MBIWD. So this Medicaid category is great because it gives so many people the ability who would not have otherwise been able to stay on Medicaid to still be on Medicaid when they're working. So what is it? MBIWD is going to provide Medicaid coverage to disabled workers between the ages of 16 and 64. Right now, we're hoping that there's work to get that age cap of 64 changed. So hopefully that will happen. The monthly premiums are potentially required depending on how much the person is earning. They're going to be calculated based on the income. So who qualifies for that is to be a U.S. citizen, resident of Ohio, again, between ages of 16 to 64 currently, have to have a disability. Actually, that's technically they say you have to have a disability that meets the definition that Social Security uses for disability. You have to be employed, and there's no minimum though of the amount you have to work. So you don't have to work a certain number of hours or make a certain amount of money to qualify. As long as it's taxed employment, you can be working, very minimally, and that could still count to be eligible for MBIWD. Your countable income needs to be less than 250% of the federal poverty level for the year. So unless I've missed it just in the last few days, I don't think that the federal poverty level figures are out for 2023 yet. So as of now for 2022, 250% is an annual amount of $33,984. And that's countable. So it's the same as what we talked about before. They're going to apply the SSI deductions. Plus there are also other disregards that they can apply to individuals' earned income. I've seen examples of people making close to $100,000 who fall under, once they give all the deductions, they actually meet the requirements and can be eligible for MBIWD. So really great type of Medicaid. The resource limit is the other really wonderful part of MBIWD. Remember 2000 we keep talking about is the limit for all these other types of Medicaid. The resource limit for MBIWD is significantly higher. And in 2023, it's going to be $14,318 is the limit. So significantly higher. Okay, I'm going to go on to the next one. Next slide. So I just wanted to give a couple kind of examples, situations that someone might be in. I think it's confusing sometimes that people can be eligible in multiple categories of Medicaid. So we talked about all these different categories. You could have people that get SSI, so they have SSI Medicaid. They also have a waiver, so they have waiver. They're technically eligible in multiple categories of Medicaid. So this is, I think, an important thing to know, the intersection of Medicaid buy-in for workers with disabilities and individuals who have the waiver, the home and community-based service waivers. When you have both of those, you are not subject to a patient liability. They call it share costs sometimes too. Those are interchangeable. So that can be really, that can save someone a lot of money. And I know people probably on here probably have experience with this and have seen this. So I have a little example of Tish. She has a level 1 waiver, and she's receiving $1,200 a month in SSDI. She is, oh wait, can you go back to the, thank you.
Sorry.
That's okay. I was like, wait, I don't have it memorized, Keith. I can't. So she starts working. Let's say she's making about $800. She's making $800 a month. So her total monthly income is going to be $2,000 between the SSDI that she's still going to receive and her $800 in earnings. So this is technically over the waiver needs allowance, which is $1,783. They give you another $65 disregard if you're working. So technically we could look for her at $1,848. But she enrolls in MBIWD, she is not going to owe a patient liability where she normally would. It would be dollar for dollar of that income. So between the 1848 and 2000, that's the amount she would owe in a patient liability if she did not enroll in MBIWD. So it's going to save her money each month because the MBIWD premium that she would owe is going to be significantly less than what that patient liability would be for her. All right, now the next one's good. Okay, and then one other kind of example of a combination of Medicaid categories and how they intersect with each other would be someone who has SSI or 1619B, so both related to SSI Medicaid. And then they also have a home and community-based services waiver. So if you're categorically eligible for Medicaid, so for example, SSI Medicaid would be under that, 1619B Medicaid, you are not subject to the patient liability or share of cost either. So similar to what we just talked about before for MBIWD, if someone has another category of Medicaid that falls under categorical eligibility, they would not be subject to the patient liability for the waiver either. So I just gave like the citation here for that too. And quick example of that would be Ron, say is eligible for 872 SSDI, $62 per month in SSI. So he's someone who's getting both SSI and SSDI when he's not working. And I did these figures for like everything else, 2023. He starts working part-time, earning $1,000 per month. So this would result in no SSI payment, but he goes into that 1619B Medicaid category. So like we talked about, if it's your earnings, you earn too much money to be eligible for SSI anymore, you don't get your SSI check, you're still eligible though, and you're still eligible for 1619B Medicaid. So because he's categorically eligible, he is not going to owe a patient liability. So that leaves him, even though he's over, again, like the individual we talked about before, over that waiver needs allowance, the 1848, when he's working, he is not going to owe a patient liability. So that benefits him to be eligible for the 1619B Medicaid and have the waiver. And I think, yeah.
We had a couple of questions come through.
Oh, okay. I didn't see those.
One was about MBIWD. So you want me to just ask you that one out loud here, Jeanne?
Yeah, sure.
Okay.
Sure.
It said, how would Tish enroll in MBIWD? Call DJF, I can't even say it. Call DJFS.
DJFS. Yes. Yes. Contact Job and Family Services and indicate, yes, that you're working, that she's working now, and would like to be put in the MBIWD Medicaid. They'll let her know what she needs to do as far as probably request, proof that she's working, pay stubs and stuff, how much she's making.
There's another one in the
okay.
Q2. It's how do individuals get consultation on their benefits to ensure they're getting the maximum benefits available? That's a big question.
Yeah. Well, so that's what all of us on the call do, work incentives counseling, benefits analysis, benefits planning. So depending on their situation, you can either, I myself can get referrals from counselors since I work for OOD, anyone that's connected to DD in certain counties. And then we have other, I have other coworkers that cover other counties. Same thing, like Tanya does this work, Dorinda, Latosha. So you can, I guess, just figure out as far as getting it funded, who's going to pay for that. Maybe depends on if they are working with OOD or if they're not, what county they're in. So you can just, and then there's also free through WIPA projects, through some different agencies, they can get benefits planning and advice through them too.
And Jessica, if you have any questions specific to where you are, you can send them to me or to Lisa if you have questions around possibly getting hooked up, getting somebody hooked up with a benefits analysis and education, et cetera. So just send me an email and I'll put my email in the chat just in case you have other questions. So thanks, Jeanne, for answering. We have another one come through, and you don't have to answer it, Jeanne, unless you want to, but anybody else is welcome to. Yeah, sorry, I've got you on the spot, so just tell me to stop if you want me to. But this is from Amanda, and she had a question around, was SSI reduced at all with the issuing of stimulus checks? She says she has an individual that's claiming it happened to him, but she's not sure that's accurate.
someone else might need to help me out. I feel like that might have happened at the beginning, but then am I remembering right that they're not supposed to count them now, right?
Yeah, I don't remember anybody who got it reduced in the beginning. As far as I know, they didn't get reduced in the beginning. But there is that possibility that that could have happened if they, sorry, that's the classroom bell. If they reported that income to Social Security, there's that possibility. But as far as I know, no one's was reduced with the stimulus.
All right.
Can
Any other?
I add to that?
Please do.
Sorry. So I did have several individuals. This wasn't the stimulus, it was pandemic unemployment assistance that was reduced. But it was also in that specific time frame from March to September of 2020, where any kind of government assistance because of the public health emergency was automatically waived. And then I have had other clients that was after that specific time frame, but I still went and asked for a waiver and it was approved. If it's any kind of public health insurance or public health emergency assistance, it should not reduce the SSI. There's a whole list of what those things are on Social Security's website.
Thank you. Okay, any other questions for these great benefits and folks? We're at about 5 after 2, so we have some time. If you guys have any other questions you want to ask, please put them in the Q&A and we'll go through them.
I need to clarify something again.
Please do.
I had put a response to everyone on the chat box. There was actually a direct question to me. So I want to give you what that question was. And it was, if someone has an outstanding medical bill because of Medicaid and Medicare would not cover the service, can that be reimbursed as it was medically necessary to work? So my response that I put out there, and everybody's probably thinking, what was she talking about? Because there was no question, was, let me go back and see if I can find it really quick and then I'll let you go. Yeah, if the individual pays the bill out of their own funds and are not reimbursed nor expect to be reimbursed by Medicaid or Medicare, then yes, it can be used as an IRWE if the expense relates to the disability and allows them to work. And then yes, for blind work expense, if the individual has the impairment that meets Social Security's definition. So just to clarify why I put an answer out to a non-question to everyone.
Gotcha. Appreciate that for the clarity there.
Sure.
And Keith, there was one slide missing and that I think kind of need, I would like to be reviewed, and that's what's called a VTR, a 1/3 reduction. And what that is that when someone is on Social Security, SSI, and they are not paying their fair share within the household, which means they're not paying for shelter, nor are they paying for food, their SSI check will be reduced by 1/3. And I know a lot of times I get questions of why I'm not getting the full benefit amount. And that would be one of the reasons why. It's because they are not showing Social Security that they are paying rent where they are living and that they are paying for their food where they're living, even if they are living with a relative or a parent. So I think that's very important for folks who deal with people who get SSI to understand if they get a lower amount, most likely it's because of that.
Thank you. That's very helpful. And we'll include that slide in the slides that go on to the website with the recording of today. So all that'll be in one place.
Keith and Tanya, I think this would be useful. It's more a different slide called ways to make the getting more. So what you said about not counting rent, utilities and stuff, if the family or the caretaker was to calculate that, then they could get a higher amount.
I agree with Christine, but it has to be, you have to make sure that you have good records. Because I've had a lot of clients who have turned in records to Social Security and still they didn't feel that it met the qualifications for shelter and food.
Well, if it's maybe if they live with somebody and there's a legal lease involved to show, then maybe that would help. I don't know.
Thank you, Christine. I put up the poll number 4, our last poll. This is usually what we do on the fear factor, is kind of give you guys a chance out there before we scoot to maybe vote on what might be our next subject matter. So I'm trying to find the right poll if I can. It's not coming up.
I can see it on the screen, I think, poll number 4.
Yeah, you got, it's not showing to me, but it's showing to you guys.
Yeah.
Okay, cool. Just if you want to answer that for me, and then we'll
Well,
see
the
if-
chart's showing, not the actual poll, Keith.
Oh yeah, okay, that's what's happening, is I can't find the right poll, I don't think. What's next? You know what? I can launch it, you guys. All right, I'm doing it. Y'all see that?
Way to go, Keith.
Oh my gosh. One for the home team. Please let us know what you want to maybe take a peek at next time when we get together. And if there's something else that you're really interested in that's not in the poll, please type it into the chat for us so we can know what's on your mind about possible other subjects that we can go into around benefits and working. Looks like and benefits analysis and education is pretty popular. And then income and benefits outside of SSI and SSDI are doing it. But again, if you have something that's not on the poll that you are interested in figuring out, put it in the chat for us. There's a question from Kim. How do you reach Tanya and Dorinda? Do you want to put that in the chat, Dorinda and Tanya? Your contact info?
I hope I did. Can you see it?
I'm looking. Not yet. I don't see it in chat, at least. But did you put it in questions?
Maybe. Let me just go back to chat.
Okay.
What a day.
I know, isn't it?
Gosh,
It's
it's like
Monday, isn't it?
the full
Monday
moon was
before
last
holiday.
week. What's going on?
There's some
It's
other
in answers.
Oh, thank you. How waiver services can work with benefits. I really like personal examples and stories. It helps me understand the info. And then income limit for survivor benefits. Those are some other possibilities for the next round. So I'm going to end that poll. Looks like, let's see what won the poll. Income and benefits outside of SSI and SSDA looks like won. So I'm going to end it. And there's the results for y'all to see. Looks like we got another question possibility. Or a couple questions. Is there a formula to tell the amount of the Medicaid buy-in premiums for workers with disabilities? That's from Susan. A formula to tell the amount of the Medicaid buy-in premiums for workers with disabilities.
Yes.
Anybody want to grab that one? Okay, cool.
You want me to give that formula?
It's up to you, however you want to answer
How
it.
about I do this? How about we do it in a chart and send it out with the other charts?
I think that probably would be a lot better, because like if you talk about it, probably wouldn't get in. So yeah, we'll put it in the slide deck. How's that?
Sounds good. And I'll give some examples too.
That would be so helpful.
Yeah, it's a good idea. Also note though that they're not billing anyone for the Medicaid buy-in premiums right now, but they could possibly start again. So
Great. We'll have that in the
still
tool.
good to know. Yeah.
Great. And then there was another question from Kim in the poll. What does DB stand for? It's DB 101 is Disability Benefits 101. It's a website that kind of is the beginning of the conversation around looking at benefits of working. And you can go to DB 101 and kind of get some kind of basic information and some templates and different things to start the conversation around benefits and working. So thanks for asking. That's the only question I could answer. So I did it. There's a few more things in chat. I think people are getting ready to scoot. Jessica looks like had a question. Do you have any information on the QIT account from JFS and how that would work with SSI, SSDI? That was in chat. I don't know if anybody has an answer for that one.
I think Brenda, it's not a JFS QIT. You go to a bank to establish a qualified income trust. And basically how it works, and I can actually send you some information on that too, is if the amount of income the person is over that is creating the patient liability is what would be deposited into the qualified income trust. The issue with qualified income trusts is they are non-revocable. So once you set them up, they are what they are. So make sure that's what you want to do first, but you do it through a bank and then you show JFS documentation that it was created.
Thank you, Dorinda.
Welcome.
Got one more question, looks like from Kimberly. Do adopted individuals collect benefits from those who adopted them?
Yes, adoption subsidies.
There you go, Kimberly. I'm not seeing anything else. Are you guys seeing anything else? Nope. It's 2:15. We'll maybe give another couple minutes to see if anybody else has any other questions. And I want to just take the time right now to thank you guys, all you experts. As usual, you did a magnificent job, and appreciate all the time it took to pull that PowerPoint together and to just be the geniuses you are. So thank you so much for doing this with us, because I think it's really, really helpful. And I'm not seeing any other questions. I'm really happy that I figured out how to do the poll on Zoom. So I'm just going to kind of bask in the afterglow of actually doing something right. And if I don't see anything, oh wait, great presentation from Joy. Thanks. And look forward to talking to Dorinda again. So you got somebody that's going to talk to you, Dorinda. So anything else, y'all? If not,
Well,
go
I
ahead.
have something
Please do.
to tell Jeannie. You said they're not collecting patient liability right now. Well, to be truthful and honest,
Sorry, no, not patient liability, Medicaid buy-in premium.
To be truthful and honest, some people are billing some counties for that even while they're not supposed to.
They do, but all you have to do is call JFS and read them the rule, and they'll stop the billing.
Well, I don't know, because the county has just been paying all of this because they don't want the person's services to go away.
They can't legally stop them.
Yeah. Okay. Well.
And that's that. Thank you, Dorinda and Christine, for bringing it up. And we're losing folks now. It looks like it's going down. So I guess I'm going to say, if it's okay with you guys, thank you and have a Merry Christmas and a Happy New Year. And we'll keep in mind all the things you said that might be interesting for us to look at next year for Fear Factor. So stay tuned. Have a good one, y'all.
Thanks, everyone. Have a good one.